correct. Hey, everybody. It is Chuck Barone with my broken microphone. Nothing's easy, is it, guys? Anyway, crazy week started Monday, April the 29th, 2024. Here we go with more crazy. You cannot, the week hasn't even started yet. And already, it's Nutsoville, man. Did you guys see the Elon Musk miracle today for Tesla? You got to love this market, man. So we all saw what happened with Tesla last week. Their earnings were shit, their sales were crap, everything was horrible. Stock tanked. Elon flies to China, gets the Chinese to agree to let him do his self-driving technology in China, which I guess wasn't available there. And now the stock today up 15%. Make that make sense to me. What is really different about Tesla today? Do you believe that self-driving thing is going to make Tesla in China China's promoting their own EVs. They want to put Tesla out of business, kids. So I laugh at this stuff. This is the market we're in today. Anyway, before I get really rolling, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. Really appreciate your guys' support. You guys being here, already starting up with the comments, makes it so much more fun for me to do this show and to do the hard work and digging to give you guys some stuff that's interesting and might be useful to your portfolios. All right, let's talk about these markets today. So we got Powell this week. It's really going to be a fascinating day on Wednesday to see how Powell, what his tone is. We kind of already, I'm getting into what I'm going to talk about later, but we know we got Powell this week. So markets must be feeling like Powell is going to say something good, or they just feel like they don't need rate cuts anymore because earnings have been stellar, guys. Almost half of the S&P has reported earnings, and more than 4 out of every 5 that reported have beaten their estimates. So earnings are good at companies. Don't let anybody tell you anything different, okay? So the market today was up. The Dow up 146 points, now at 38,386. Got a little winning streak going. The NASDAQ up 55 points, 15,983. And the S&P up 16 points, 5,116. So there you have it, man. The S&P has really been rallying up. It was down under 5,000, and now boom. I mean, it's just, these markets are all over the place, and that's because they have no freaking clue what's going to happen next. So they're reacting day to day. That's why you're seeing this volatility. Incredibly, though, the VIX went down today, and it's down like now around, was up above 18% when I mentioned it, 18 on the index when I mentioned it on the show. Now it's around 14. Really? How much more volatile of a market do you need than this, right? Anyway, so stock market today up across the board. Let's see what happens tomorrow. Bond market, well, the bond market rallied too. Really? Okay, so I guess the bond market thinks we're going to have a very dovish Powell. So the 10-year falls 6 basis points, now at 4.61%. And the 2-year, well, that falls 3 basis points. It was sitting right at 5%, comes down to 4.97%. So the bond market has a little bit of a rally today. The 10-year was good because it was good for mortgage rates. We need that 10-year. We don't need that 10-year near 5%. As bad as mortgage rates are, you get a 10-year at 5%, and you're going to have people flipping out. So anyway, bond market rally, stock market rally, dollar down. Okay, so this is all looking like rate cuts, right? But we know we're not getting a rate cut on Wednesday. So the dollar down 48 basis points on the index, 105.16, now 105.62 on the index. Still a strong number, but it's been up and down a half a point at over under 106. Well, I think the dollar is going to strengthen. we're not going to get rate cuts, guys. Metals today fall, but very small. Gold down $1.50 per ounce, $2,336.90 for an ounce of gold. Silver falls just 4 cents, $27.23 for an ounce of silver. So still a good, strong numbers coming across for gold and silver. Surprising that they didn't have a better day with the dollar coming down as much as it did, but I guess most of the dollars today were directed towards stocks and bonds and not metals. Oil today falls. Yay, oil coming down $1.13. So it actually came down more than just a few pennies. $82.76 for an ounce, or for 72 cents, sorry, for $82.72 for a barrel of West Texas Intermediate. Can't even read my own writing. I'm telling you guys, as this Israel-Iran thing settles down, oil price is going to come down. Bitcoin falls today down $647, $63,010. Market seems to have stalled a little bit since these ETFs. There was a lot of excitement about those ETFs. Obviously, by the rumor, so the news is we're seeing that in action here. But I'm telling you guys, Hong Kong now, Chinese money coming into Bitcoin. You're going to see it. That's going to happen all over the world now. So this is going to be something I think is going to be universally accepted. And when it is, the price is going to go up. All right. So as I do every Monday, let's give you guys some what we're going to be dealing with this week as far as data goes. Today was a quiet day. Tomorrow, not much. Tomorrow starts the Fed meeting. We'll get consumer confidence, which is expected to be down. We'll get employment cost index. That one's going to be up, sadly. On Wednesday's Powell Day. I'm sure that'll be a big day of talking about Powell. We'll get construction spending, which is expected to be up. We'll get the ISM manufacturing index, which is expected to be down. We'll get the mortgage bankers index, which will show rates being elevated, right? Thursday, we'll see if we survive Wednesday. But if we do on Thursday, we'll get to jobless claims. They're expecting 210,000 this week. We'll get productivity numbers, which are expected to be up. Unit labor costs, which are expected to be up bigly, unfortunately. That's inflationary. And we'll get factory orders. Those are expected to be down. On Friday, we'll get the jobs number from last month. 250K expected, down from 303 of the previous month. And we'll get the unemployment rate, which is expected to be unchanged, sitting at 3.8%. So, guys, this week is all about one day. It's all about Powell Day on Wednesday. Call it Fed Watch, Powell Watch, whatever. So the meeting starts tomorrow. They've been on radio silence for a couple of days, right? Now, we already pretty much know that there's not going to be any rate cuts. So what is going to be the significance of this meeting? We're not going to get any dot plots this meeting. So why bother? Well, I'll tell you why. On Wednesday, they're going to release some data from their minutes. And I don't know if they'll release those on Wednesday, but we'll get minutes, beige book. But we're going to get the Powell presser. And people are going to be parsing every single word of what Powell has to say that day. They're going to be looking for like changes in the way, because they use the same phrasing over and over, right? We're going to be patient and we're going to let rates stay higher for longer. If they hear anything about rate increases, they're going to hear anything about sticky inflation. If they're going to hear anything about, the determined to hit their target of 2%, because now economists are already trying to get the Fed off of that 2%. So it's going to be a really fascinating press conference. And the conference starts at around 11:30 Pacific time. So we'll see if I can get some of that in before the show on Wednesday, and we can talk about it a little bit. But it's going to be fascinating to see what his tone is. Is he going to be sounding hawkish or dovish? They've been sounding, they've been kind of telegraphing these rate cuts, sounding they've been trying to sound strong, but at the same time, firmly hinting at rate cuts. So it's going to be fascinating to see his tone or changing of a word or a phrase, moving markets like crazy. So get the popcorn, guys. It's going to be a crazy, crazy day on Wednesday, especially when you add up all the rest of this stuff. If the manufacturing index, we're going to get construction spending. If there's any surprises. Now, Thursday, then we'll really start the data coming in. And between Thursday and Friday, we're going to see a lot there with jobs. If jobs are hot, obviously we know that tells us no rate cuts. If jobs are cooling off and there's more unemployment than they expected, that the unemployment rate or claims spikes. So there's so many things that can happen this week that could move these markets. It's just going to be as quiet as it was last week, kind of. This week is a huge data week, so it's going to be amazing to watch it all. Now, some other stuff I wanted to talk about. You guys saw the headline on the show today. I shouldn't say the first. We've already had some of these West Coast regionals go down, right? Now we have, starting on the East Coast in Philadelphia, Republic First Bank goes under. Of course, the good news is Fulton Bank steps right in to scoop up all the deposits, their 32 branches, and all of the assets. We, of course, the taxpayers, what do we get? Do we get assets? No. The FDIC said that this failure will cost the FDIC $667 million. I love how the government does this, man. They give away the stuff that's worth any money, and they don't profit from that at all, but they take on all of the losses. It's just the government, man. It's crazy. But I'm telling you guys, this is the first domino or another domino in the series of dominoes that are going to start falling with regional banks. Now, this one was not completely all about, commercial real estate, but it shows you what shaky footing these regionals are on, right? And when these commercial real estate BKs really start happening big, you're going to see the dominoes start to fall. Guys, I know you guys know I got a dog. You heard her bark. It's Molly, my Labradoodle. Have you guys been wondering how come veterinary services are going up so crazy, so expensive? Like, it's almost like a friggin' doctor now, right? And you think, well, these vets are just, they think they're doctors now, so they're charging more. No. That's not what's happening. Let me tell you what it is. Private equity. I was so shocked when I was reading this today. So private equity groups are buying up all the big veterinaries because they know they have a captive audience there. Pets have come a long way, guys. It used to be just the animal. You had the dog or the cat. Now they're like part of the family. People, especially empty nesters, baby boomers, stuff like that, people like that, these pets are like their kids. So they're going to pay extraordinary numbers at a veterinary office to heal or cure or fix their pet. So private equity figures they got a beautiful, wonderful, can't lose bet there. Guess how much? $60 billion they've invested into veterinary. $60 billion. So there you have it, guys. Want to know why everything's going up? Private equity. Tesla. I'll call it the Tesla miracle today. So Elon Musk gets China to agree to him selling his cars with their self-driving stuff. I guess China must need to be wanting to steal that technology, right? Nice to see everybody here. I got my man Attila, Kevin, Elevate. I saw you earlier. Thomas, nice. Ken, nice to see all you guys. Anyway, let's get some of the ladies in here. Anyway, guys, Tesla miracle tanks on earnings, tanks on actual real news and numbers, and then comes bouncing right back up on just a load of bull. If you bought Tesla today because of this news, get out as quick as you can. Tesla, I think the party might just about be over for Tesla. They used to own this market. They had all the technology that was just so amazing compared to what everybody else had out there. Now everybody's catching up pretty quickly. They got universal competition from everywhere. Every government is behind their EV makers, helping them get their businesses moving, subsidizing, doing what they have, just like we're doing for Tesla here. And so a lot of their advantages that they had are no longer here. That's why their sales are so crappy, because they're super expensive too. Let's not forget that, right? So and then you got Musk, who's now become so political. He's making mad the people who buy Teslas, because, conservatives are about pickup trucks, right? Conservatives are not the guys running out to buy electric vehicles in most cases. It's the liberal branch of the country, right? So Musk now, with his political stuff and all of the Twitter and X and everything else, well, guess what? Alienating some of his best part of his market. So how is that personality going to be the one that brings Tesla back? It's going to be fascinating to watch Tesla's numbers going forward to see if they're even remotely close to getting to what everybody expects them to be. I got a feeling they won't. Okay. And now we saw this one, the government getting involved finally. You guys have heard me ranting and railing about this, about the institutional investors buying up all of the real estate, buying up all the starter houses, owning percentages of whole neighborhoods. They said that institutional investors own 21% of the rental properties in Atlanta. They're buying bulk here in Nevada, bulk, buying up whole neighborhoods. And you guys have heard me raving and ranting about it, because they're creating this artificial market, because they pay cash. They don't mind overpaying. It's not their own money. So they've created this gigantic pain in the ass where first-time buyers, people trying to get into real estate to buy a home to live in, can't afford a house, because they want to rent one from one of these institutions. Well, now the government finally wising up to this. The only problem is the government trying to fix something seldom works out the way it's supposed to. Because guess what? These private equity groups, representing trillions with a T, guys, are going to just get in there and buy these politicians off. So it's going to be another whole front on the economic landscape now to be watching. Let's see the government talking about creating rules to limit institutional ownership, to tax institutional owners differently. What they consider an institutional owner is someone that owns more than 1,000 single-family dwellings. Holy crap! So this doesn't affect mom and pop, or even the moderate, what I thought would be a big investor. If you own 100 houses, in my mind, you're a pretty big investor. Won't affect them at all. Just the big ones, the Blackstones and the Carlyles and the friggin' KKRs, the Pinnacles and the rest of them. So let's see exactly what happens. I'm guessing a flood of money is going to come rushing into these politicians. It is an election year after all, and you ain't going to see jack diddly nothing, zip, zero, nada on institutions buying houses. Anyway, guys, that's it for the day. Happy Monday, everybody, man. It's going to be a crazy, crazy, crazy week. I'm so happy to see everybody here on the chat. It's so nice, man. We're going to keep this going. If you can, guys, hit the like button. It changes the algorithms around. It helps us get the video out in front of more people. We've been doing better with our views and our watch times. I want to keep moving that forward, guys. I appreciate your help. I appreciate your support and everything you guys do for the show, from hitting that like button to your questions and comments and all the fun stuff we do. I appreciate you guys. I do. All right. Anyway, that's it for the day. I've been babbling on almost 19 minutes here. Everybody have a good evening, and we'll be back tomorrow to set up the whole pre-Powell Federal Open Market Committee meeting and everything else that's happening. Until then, guys, have a good evening. Take care.